This is Justin Pulitzer. This is my weekend review video for Sunday, November 27th, 2016. Heck of a lot of stuff to cover. Just jump in, right? We'll cover some of the macro outlook from the Fed minutes this week. I'll talk a little bit about some of the market keys, and then we will get into the major market indices and some of the more prominent momentum stocks and a couple of earnings stocks. Anyhow, Fed minutes came out. The GDP risk they see is to the downside. Their foreign risk they see to the downside. Unemployment risk they see to the upside. Inflation is balanced. The economy is balanced to lower. And that durable goods orders number that came out this week was very highly skewed toward commercial and military aircraft. So where does that leave us? At first blush, if you were to look at these Fed minutes and you didn't look at the FOMC probability, which is like in the 90%, I think, or something at this point, you'd say that the Fed is going to stand pat. The Fed minutes were not exactly what I would consider hawkish. I do, however, think that there is going to be a rate hike, considering they hiked rates in December, and because the Treasury's market is kind of giving them a pass to do so. Should they? That's a whole other story. But I will say this: the three things I look at: technicals, fundamentals, and like macro and credit risk. We have technicals that are improving in the market, fundamentals that are improving with tax cuts and repatriation and growth and stimulus packages, and a macro outlook, which is a little bit maybe concerning overseas, but there's really no credit crisis to be seen. So seems to me that the Fed can probably get away with it as long as they sort of don't talk tough about more hikes coming over in the future, the dot plots. And my guess is that they're going to hike, but talk super dovish. It's still going to be sort of lower for longer. The Fed has signaled that their end target rate, their neutral rate, has been coming down. It had been about 3.5%. My guess is it's going to be somewhere between 3 and 3.5%, and assuming there's no huge pickup in inflation, which they don't seem to be too concerned about. If you look at the Fed funds, the futures for going out even into the first quarter, there's not a second hike that is likely anytime soon. So that's my scoop on the Fed. Let's get into the keys here. With regard to the VIX, we broke a kind of a potential for a turn in volatility. We were starting to see some higher highs off of higher lows, and now we're making lower lows. Keep in mind, the VIX will always... I think the only time it's ever breached 10 was in 2007, and that led to the financial crisis. So we are getting to the lower end of range. That doesn't necessarily mean we need spikes, but we could be in kind of this lower volatility chop pattern. So that's what I'm thinking. We closed out on the VIX here around 12, in the 12s. Purely directional play here, meaning buy calls, call spreads, puts, or put spreads. I'm not really that interested in selling out of the money premium at this juncture. Getting a bit oversold in terms of the stochastic, so the VIX could go down here, but you're sort of pressing your bets. I don't really think that we're going to have too much volatility going into the fourth quarter. It's a little bit, the final month of the year. It seems to me that a lot of funds have underperformed the market and they're going to be playing catch up. That doesn't mean that there can't be pullbacks. The market can't be up every day, from now until infinity, although I guess it's statistically possible, but it's not highly probable. There will be some pullbacks at some points, but I'll discuss that when we get to the major market indices. But the trend now seems to be bent to the upside. So purely directional play with regard to the volatility index. I had a couple of people talk to me that I was hanging out with this weekend, or people who messaged me, by the way, about this new election recount, and is that going to introduce new volatility into the market? I doubt it. It seems it's a really huge long shot to me. They're looking to flip something like 107,000 votes over 3 states, and not even I think one of the states, either I think it was Wisconsin, is like 27, almost 27,000 votes. Michigan is like 11,000, and Pennsylvania was like 70,000. To switch the election, recounts usually are for 300, 1,000 votes or whatever. It seems like a moonshot to even think that this is within the realm of possibility, and any serious statistician who's not being opportunistic to raise money would I think would concur. Anyhow, that's I'm not really seeing that being a concern. The Fed, though, that is a very real issue. The dollar here is coming up from the bottom and getting a little I don't want to say top heavy, but it's run a lot. We're basically to the upper end of the range from the lower end of the range. Let me see if our zoom. Yeah, I mean, this to me looks like it's going to kind of dribble higher. I'm seeing it might be due for some consolidation. I think the DX, though, the actual dollar futures, to me are a little bit more interesting here. What time frame are we in here? Yeah, 4 year. All right, so this might not be long enough. Let's go on a 20-year. Just by the way, look where this topped out, 102.12, where I had discussed 102.09 basically, 102.10 being the 61.8. So it doesn't surprise me that we're near the upper end of the channel and at a big fib after moving up a lot, and that there's a little bit of resistance here. But I had done some work, and I had basically done a double, like if you take this as the range and you double it, that could maybe take you close to 109. So this to me looks like consolidation, and it's sort of just trying to break out. So I do think we're at some resistance here short term, but this could happen if the Fed gets really more hawkish or we have a larger pickup in inflation. Keep in mind, we are now going to have repatriation, which should keep the dollar bid for a while. But the dollar to me is coming in. I mean, it is technically here above range, but we came up from the bottom. I'm thinking that near the channel high and this fib could back it off a bit. I don't want to get too into my circular reference that I've discussed with the dollar, that the higher the dollar goes, the more traders are going to think the Fed is going to hike, but the less likely they are to hike because of the dollar. So I'm thinking that, like with treasuries and the dollar, that the event could actually be the signal of the top in terms of the dollar and maybe the bottom in terms of the bonds. I had drawn in a week or two ago an oval here. This was a red oval, and then down in here was a yellow oval. I deleted them because we're basically there, and I didn't want to confuse the chart pattern, but this to me was a critical point. We knifed through it pretty badly. I do expect it to be retested at some point. This area I expected to be a pause just because it's a big volume node, and we basically are moving from the high end of the channel. This is the kind of uptrend within the channel. So now that this snapped, I think a lot of people are targeting this lower end, these reference lows, the lower part of the channel. And you also have a bigger time frame, 61.8 down here. So I'm thinking somewhere between the 114.88 and 117.39 may likely be the bottom. I know a lot of people are targeting this, so we may see the bounce first. The best setup to me would be this to just continue to get oversold into the Fed, come down into the technical level, and then set up for a larger rally. In the bigger picture, this has moved down quite a bit, but I want to show on a longer term time frame just what we're talking about. Look where the 2009 crash level was. We're basically just kind of below there. So rates on an absolute basis, yes, they're going up, but they're not, they're still historically very low. Let me zoom in here. Getting a little better at this little zoomerooski thing here. So we have a low. This is starting to be getting a little bit begrudging. You have a bit of a wedge here. So if you can reclaim this 123.15, if you look at the high here, 123.14, if you could get through this area, then I think we're going to bounce to at least try to, I don't know if we're going to fill the gap, but we may want to rally up to the backside of the down channel and this old uptrend. The ideal, like I said, though, the ideal scenario would be for this to just continue and get oversold and then set up for a nice buy down at these reference areas after having come down from the top, which is the opposite of coming up from the bottom. HYG. So oil is starting to get a little bit more squeamish. It came out on Friday that there's not going to be, I shouldn't say there's not going to be, because there might be, but the hopes of the November 30th meeting leading to anything with OPEC, and I read now that the Saudis are not meeting with the non-OPEC nations on Monday because there's not a deal. So oil took a bit of a tumble, but I don't really think that the conditions that were fitting of oil are the same, but traders may do what works until it doesn't. I'm a big fan of that line of thinking. I had played this short. I had seen a lot of puts go in here, and I talked about covering down here near the gap fill. It turned out to be a good call because we got back up pretty quickly. I'm sorry. And then I talked about reshorting up here by the 61.8. It pressed a little further, but then came down to near this gap fill where I discussed again covering, and it has worked out. So this was the kind of pattern changing moment. Hold on. Try and draw in a... this, by the way, when I talk about the credit worries, the credit crisis, so to speak, this is where you would see it, the HYG. There is no futures equivalent, by the way. This is an amalgam of like higher yielding kind of debt. Let me make this yellow and maybe a little bigger. So we came up. I said that this area, this consolidation was going to be the key. We broke out above it, kind of had a bit of a successful retest and are back into it. I mean, rising again. I have no position anymore in HYG at the moment. I'm sort of on the sidelines. If we were to dip back into this range here and not hold these kind of, like these were moves that ended on the highs of days. If we were to get now back below the 20 and back into this candle's range, I would say that this might have been a look above and fail, and we're back into a chop zone. But as long as the HYG is above 85.31, I'd rather be more long than short and don't really want to be that interested in being short. So yeah, I'm playing a little wait and see with this kind of range. You can see this came up to the trend, kind of spent a couple of days just consolidating, and now it's basically powering through. So that to me is a little bit more confidence that's coming into the tape, maybe a little bit that there won't be as much of a credit crisis. We'll have to see how that plays with oil. Speaking of which, this now is going to be baking some noodles, including my own. We had a pattern here of a very large inverse head and shoulders, and now we're kind of consolidating and, oddly enough, possibly forming a actual head and shoulders. Can we, when I say can we, I mean can I make this, yeah, there we go. So we broke the trend, kind of looked back into it, came out of it again, and now are sort of futzing around back in there. We're not below this consolidation, so I'm not that crazy. A lot of this happened on Friday, late day. But this is starting to look a little head and shoulders. This looks like a look above and fail, and when that happens, you kind of usually come down to the lower end of the range again. But maybe this is the new range since it kind of broke out. This was a look into the channel again. Now we're back out. I think I'm going to wait and not try to game the OPEC meeting. If this does do a head and, like if this area here now was to snap again, remember I talked about the look below and fail? And we came up to the higher end of the range. Now we have a bit of a look above and fail. Maybe we're rotating back to the lower end. I like it going lower into the meeting because the expectations are very low. And if it were to get back up above this right shoulder, I think it's kind of go time to the upside. But if this were to lose this look below and fail range here, which is in the 42s, I'm thinking this could come back and retest the 35s and also this channel low. So what does that mean? It means I either want to be a buyer above the right shoulder on a failed head and shoulders pattern, or I want to short the low here again because it was like almost a triple Lindy bottom for those of you who are back to school fans, and that there are no such things really in the market as triple bottom. I mean, you could say this is a double bottom. I'm going to say it's triple. And if we lost it, I think that we could basically double up the head and shoulders range to the lower part of the absolute range. XLE isn't really showing too many signs of being all that worried. Wow, look who's a big boy with the charts. We're above the area here, the upper end of the channel. This was the breakdown area. If you see where we kind of came down from, it kind of couldn't even retest. But this is, to me, is an accumulation channel. And even if this were to come down to the lower end of the range, it to me is a more bullish pattern than bearish. So I like the idea of booking some profits up in here, but we have now 1, 2, 3, 4 days of consolidation. So above the 4-day range high to me is still bullish. Below the 4-day range low, I think we could get a pullback to this like 150-day moving average confluence. And of course, the 200, on both oil and on XLE are very, very key moving averages. FXI, trying to repair maybe? I don't know. It's a little early to tell, but the good news, and let me see if I can get this to... these chats, they just don't make them like they used to. Alrighty, maybe we'll zoom in here. Okay, that's a little bit better. So we had we're still in a downtrend. The 50 MA here is very key. We came below the channel and spent a bunch of days down there, and now we're trying to reclaim the channel. We're not above the downtrend line. So what does that mean? I like the thing, I guess, for if you want to try right or right out long. If you want to do it here, the 100 MA to me is the must hold. If you were to lose that again, this to me would be just a trend failure. And let's redraw this as a channel. You can see this would just be a retest of a down channel that we would now probably come lower out of. If we're to break over that range and take the 50, I think that this will likely come up to retest the highs, like it would be a failed breakdown. So I'm desperately watching this channel for a trade. Friday's range was really narrow. If you want to day trade it above the high, it could probably be a quickie to the 50. Below the low, probably to the 100 and maybe even to the 20. So I'm keeping an eye on that. The BABA is, I don't know, this thing is just acting kind of squeamish. You got basically a trend touch. The bounce has been rather kind of meek. I like this day's low. Anything below 90.75 to me, and this multi-day consolidation would be a absolute short, probably to these lows, and maybe to infinity and beyond, right? The Buzz Lightyear, maybe even down to 78s or 84s. If you were to retake now the swing high here of 95.30, I would constitute these as higher lows, and then the pattern might be trying to repair for maybe a move back to 101s. Maybe I would say 98s, maybe to 101s. You could easily, if you clear this, I think see the channel or the downtrend. So that's really what I'm looking. I would buy stop BABA over 95.30 or sell it short below 90.75. Pretty simple. IBB 200 MA looms large. Basically a hold here. We're kind of just in this, I don't know, wedge pattern. You could just draw a little downtrend line here. I like a setup here for a trade, and we'll discuss that. I like that you had a big body candle. I like that you had to look into it and fail, meaning we got the close of the next day was above. So we can keep it simple, stupid. Anything above 281.28, which would be above this high and likely above trend, we could play for a move back up to 294s and maybe even 301s. Below 281.28, which was this pullback low, and the 100 MA, I think is at the very least a quickie to the 50 MA, 278, and then maybe even potentially lower again. So Friday's range to me is actionable. This Gilead, I've been kind of, I don't know, keeping my eye on this out of the corner of my eye. It's just been this really cruddy, disgusting. Oh, that isn't good. We'll have to let's cancel that. Can I zoom? Sure. Right. So the 50 MA here has been looming a little large. We're above a couple of downtrends. It's really been riding the downtrend. Ride the lightning. So anyway, again the same kind of a setup. You had a rejection candle, the same kind of to the 20 and up. You're below the 50. So I think you can play against Friday's range. Above the high, to me, is probably a long, maybe to the 50 and maybe even to the 100. Below the low, probably articulates still lower and ride the lightning lower. So, yep, that's my thoughts on that. With regard to the economy, and here we're talking macro, this is the chart of copper, Dr. Copper, if you will. Dr. Copper to you. Oh boy, it's been a long weekend. This isn't exactly spelling recession or bad economy. It's signaling to me things are getting better. We're holding the 10-day here. We're above this high. So if this were to somehow get back down to the 2671, I'd be looking to sell puts against the 200 and this confluence. We are getting a little steep. I don't necessarily know if it's the wisest to chase, but this to me looks like a pattern that wants to go higher. The transports, also not exactly looking too shabby, as my old chemistry teacher, I want to say, used to say. We have a inverse head and shoulders, another inverse head and shoulders, a neckline break, a trend break. This probably is going to retest the old all-time high, is my guess. Pullbacks, I would think, are buyable. You don't exactly have the best trade location if you're first buying now. I had been playing this with FedEx, but look, you had 3 big body kind of days, a break, and an extension. Not too shabby, not too bearish. This, to me, signals maybe a better than expected holiday season. This could mean good earnings for Amazon. I mean, there's a lot of things that you can extrapolate from this, but first and foremost to me is that the downtrend snapped and it's filling up the triangle. So I don't know if I'd be continuing to chase, but I definitely like trailing up stops if still long. And I don't want to get into Fibonacci extension talk right now, but because we are coming up from the bottom. But I do think that this area here might be a little bit of resistance. Even a puncture through to me would be a tough road to hoe because it came up so much. But longer term, bigger picture is bullish. This is FedEx. This is an all-time high in Federal Express. This is what is known for the layman terms is, again, I love when these charts make it tough. This is a professional gap, a inverse head and shoulders, a neckline snap, pullback to the 50, and launch time. Came up through the old all-time high and is continuing. 50 MA, I would be into, if there was a larger somehow correction, I would buy the 50 for a right or right out play. I had been short puts in this that I sold actually somewhere in here. Don't remember where, but I bought them back for nothing. They are done. So this is hard to make the case that we are getting ready to slip into recession when you have stocks like that going. Bank of America. Does somebody think that there's going to be improvement in the bank earnings? I think the Trump win really was a game changer for the banks because they're talking about rolling back all or part of Dodd-Frank. I've said in the past that I preferred the insurance companies, the MetLifes, the Prus, those kind of companies over the banks. unless there was a regulatory change. And this, to me, with rate hikes and regulatory changes, this could be good. I mean, it's great for the banks. I don't know that the trade location here is absolutely amazing, but if you project a Fibonacci extension, this could see 23s. We're at the 1.272. The 1.618 would be up at 23s. It seems like it has a date with destiny. I don't know that you need to chase right here. I mean, there will be pullbacks. I have a feeling that the banks may peak along with rates bottoming and the dollar topping on the actual Fed hike. So it seems like this will probably be along into the Fed if you want to just draw a trend here. The trend is your friend as long as it holds. Anything above 2020 is still long. Anything back below there, to me, gets maybe a little more iffy. I am more not looking to try to pick the top to short as I am into buying the dips. I don't believe, and I know a lot of people are having trouble with this just from the messages I get. Everyone's trying to look to pick top. No, I shouldn't say everyone, but a lot of people are looking to pick tops. A lot of people are trading in size that they're not accustomed to, trying to force the market to do things, to pay you, basically. And the market will pay what it wants, when it wants, as often or as few times as it wants. And often knowing the technical picture, the fundamental picture, and the macro picture along with credit picture, I play along the line of least resistance. When I have all three of those things going in my favor, which we now seem to have, I'm more in favor of being long. When they're going against the market, I'm more in favor of being short. And then when it's jumbled, which it had been for the most part of the last few years, it's more of a tactical type of a situation. So always keep that in mind. I find that very helpful. Goldman Sachs, kind of the same story. This, though, did come up from the bottom. This is at a longer-term downtrend. So what now? Is Goldman Sachs a short? You could try it right or right out. I mean, I'm not going to knock that play, but if you look here, this is really bubbling under is a term I've heard used, bubbling under the trend line. So it's working off some of these oversold conditions. I think you could use these lows here as your key, anything below 204.15. I don't even know if I would let it get that far if I were long, but maybe below 204.83, this area. That I think you could initiate short just because it spent a lot of time up here and these people are all kind of late and wrong, and you might get a pullback to like the 20. But if this kind of consolidates and just rides this channel and then goes, it could continue. As crazy as that sounds, to 218.77 and God knows even beyond. I mean, I'd be interested now that it broke here in maybe when the moving averages catch up, it is a buy on dips. But like I said, this if you're short, I think you could use that 213.41 as a stop, and you would add below the 209.37 or the 208 area, whatever you want to use. I usually like this, since this was a mini look above and fail and consolidate here. I like this range. Above 213.41 can remain long. Below 209.37 is I guess a short entry, and just keep trailing down the stops. Wells Fargo, these kind of the same story. They dumped the chump, right? They dumped their CEO, which I had kind of predicted. I thought was going to happen. It's now breaking trend. 58.77. Let's draw that in on the fly. All right. Little luck, yeah. All right, so we're back kind of above trend and treading water. You have a lot of days of consolidation here. So, I mean, as long as this holds really 50, 73, it's still okay. Below there, to me, would be a short, because you'd have this big move up, all these days of consolidation, and then that low, for me, would be a short maybe to one of these fibs where I'd be a buyer, particularly the 61.8, considering it's near a gap fill and the 100 MA and probably the 50 when it gets there. I don't use 38.2s on pullbacks. I use them on bounces. So yeah, round and round she goes. Where she stops, nobody knows. But this consolidation pattern to me looks more bullish than bearish. Above the consolidation high of 52.98, it's probably still a long, and below 50.73 to me would be a ride or ride out short. Caterpillar, highly shorted stock by some very prominent hedge fund managers, held the channel low, and now looks like it. I see the power of belief here. Yeah, this to me is looking like it may even want to come up to 105s. I mean, as crazy as that sounds, the pattern here is bullish. I mean, you have a gap and a hold and a move higher. You have a 2-day range here of consolidation of this kind of breakout. So if you're right or right out above 96.44, remains long. And if you want to try a quickie short below this 95.21, 94.95, like these areas, you could try a right or right out short. But above these 2-day highs above, to me, would remain long. So yeah, that's the story with CAT. Deer already is broken out. If you do a 1.618 Fibonacci extension from this entire range, and keep in mind this is coming up from the bottom, so this is kind of getting a little parabolic-y. I had thought that there was some room higher. This thing, people were asking me where I thought this would go on earnings. I thought a little higher, but wow, a lot higher. The Fibonacci extensions, I mean, this could even go up to 115. I mean, you know, we are in open air here. There is no real overhead supply. And anything above this 98.23, I mean, you could even constitute this as a professional gap, a range extension. 105 is a good idea to maybe book some profits, but 115.58 is potentially in the cards for this one. There we go. This was in a uptrend. It's now above the channel high. I mean, it's just still bullish. Any pullbacks to me in this area, as long as this gap range they holds 98.58 is probably, I mean, 98.57 is likely still gonna be bullish. I mean, this could even pull back to like retest. Sometimes when you get like a channel breakout, you'll get a retest of the backside of the channel. That usually is a right or right out long, by the way. Particularly if that's were to like kind of chop for a while and then be a trend line and a backside of the channel test, that's even higher probabilities. Someone was asking me about this CF Corp. The ag stocks have been in downtrends for a while. This is just breaking out here. Unbelievable. These chats just don't make it easy. You had a pullback to the 200 MA. So keep it simple, stupid. Above the 200 MA remains a long. Above the breakout to me remains a long. Below the 200 is either a see. Look, this was the big breakout candle. You basically tested to about halfway back in the 200 MA. This should not be revisited again. If you break this low, I think it's a short, probably to the 50 and 100-day moving average confluence, which is also roughly the midpoint of this range. And I would guess. Let's not guess. I will say that my working hypothesis at the moment is we would be near a fib. Surprise, surprise. That would probably be somewhere between 25.51 and 24.39 if this were to snap. So how I would play it is this: is if we lost the 200, I would initiate short. And I would be looking at this low if it were to take out the 26.96 to 97 to add to step on the gas, because this would be now a false breakout. But like I said, as long as we hold that 200, I'd rather be more long CF than short CF. SPY. Got a little macro-y there on y'all. All right, so SPY. This is not constituting, in my view, a very bearish pattern at all. You took out this downtrend, you took out the reference high, you had a bit of a stutter step here, and now higher. There was a megaphoning pattern that you have now broken out from. If you do a Fibonacci extension from this high to this low, and you basically draw in a new channel, which I have taken the liberty of doing, you have a long way to potentially go. I don't know that it's going to be a straight shot, but the 1.272 is 222.65, and the 1.618 would be 26.53. And if you did a measured move from this move high, project that to this range high, that's 229.41, which looky comes into play with the channel high. So I don't know that this is going to be just a straight shot, but I do think that the trend is clearly now higher. We are in overbought territory. We are getting a little overbought stochastically. I don't know that we want to be first chasing here if you haven't been long already. You basically had the reorientation day, the kind of consolidation range. So anything above 218.31 and anything above 219.60, I mean, I'd rather be long than short. I'd rather be more bullish. The 50 MA, remember, was the big resistance. At some point, this will be retested, I believe, and that point, God knows when. Keep in mind here, by the way, this was flattening to down. This is now starting to bend back up. When 50 MAs are bending up and they're retested, I like to buy them. Like, look here, when this was starting to bend back up, it was a buy. When 50 MAs are downward sloping and they're tested, they're shorts. So my guess is, I don't know when. We're roughly, was a big strike, by the way, 215. I don't know that we're going to come all the way back down to 215, but we may come back down to like retest this breakout area at some point, like the 217s, 218s, 219s. That area to me will be very key. I don't really see the market getting overly bearish unless we lose the 215s, which is this pullback consolidation range. So as crazy as it sounds, you can pull back even as far as the 215s, and the market would still be a BTD rather than an STR, meaning buy the dip, not short or sell the rip. I know it's wild, but it's happening. We're not even below the 10-day. I don't really want to start getting too bearish. The 10-day is basically riding kind of close to the channel low. So, yeah, I mean, like I said, I'm not looking to maybe just initiate the chase here, considering we came up all the way from the bottom here and broke out. But I am more of a buy the dipper than a sell the ripper, and you know my upside levels. The expected move this week in SPY. The VIX, by the way, when it's in the lower end of range, I use the expected move of SPY as sort of an upside cap as opposed to a downside potential, because if the market starts moving down, the VIX starts going up, and the expected move goes up. So $2.46, it's really plus or minus, but I will use that as a sort of an upside cap. The belle of the ball, IWM. So let's talk about some street cred on IWM for a moment. And please note this this pattern, this inverse head and shoulders that is now decisively broken to the upside. Let's talk for a minute, just the two of us. I talked about this range being key, and I had said when we broke this channel, I thought we would see the lower end of the box, which we basically did. And I had talked about playing it short, and I also talked about covering. I thought we'd see a rally to the backside of the channel at the very least. That all played out. It played out even more. Holy moly. So we broke out, and we're just going. This is a massive, massive short squeeze. I think tons of people piled in here. I think tons of people added, and they just got their throats ripped out. So you basically are now operating on a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. I think it's basically, if you count this day, like a 14 or 15-day rally. So, of course, that means short, right? Not necessarily. Keep in mind when this happened, you had these very minor pullbacks, and it just ground higher. Then you later got a bigger pullback. Again, ground higher. Again here, just grinding higher. We're also above everything. This is all-time highs here. I did a 1.618 Fibonacci extension of this range, and we busted through it. So I'm not saying to pile in long here. I actually was advocating taking profits a bit. But if this were to make a straight shot up to the channel high, and you can see it has spent a little time on the wrong side of it, I'd kind of just use this. This to me would be a good right or right out short. You don't want it if it consolidates, but if this just keeps going, like if there were to be like another couple of big up pushes into there straight off this low, this to me could be a good right or right out short for a pullback, maybe even to the 125.88 to 128.87. I don't even know how easy that would be, but this was kind of the gap area. This was the breakout. To me, that seems like it is very possible. I don't want to get anyone too excited, but if you were to draw a 1.618 Fibonacci extension of this entire consolidation range, you're talking about 151 in IWM at some point. I would say there is almost no chance of a straight shot there, but like imagine this were to just like come up and ride the lightning. That would be something for the history books. If you do the 1.272 and you coincide that with the upward part of the channel, this to me seems like a likely area. Somewhere between 137s and 138s, I think are going to be a good right or right out short for at the very least a attempt at a pullback. The best scenario, like I said, is for this to just come up straight up and just get so overbought here, and overbought here, and set up for somewhat of a pullback. The bad news, though, is it might be one of these where it just kind of grinds or pulls back and chops and sort of frustrates people. So we are clearly now in a breakout, a very easily defined breakout, and I, again, am more of the buy the dips than try to find the top and short the rips. I know that's a very hard concept for people to understand. It's frustrating, but this is the game this is the lives we've chosen, right? To quote The Godfather, this is the lives we've chosen for ourselves. The expected move in IWM this week is $2.38, either plus or minus. The laggard is the Qs, actually. You can't really say that this is too bearish because this kind of held up the best. I mean, look, even in the correction, we never even got a trend test. I mean, it kind of just held up here. You had multiple days sell off, and then we're right back up, and you're over the old all-time highs. I mean, this is just consolidating. You're even above the 50. I think that the reason for this, and I've heard a few people say that, the quality stocks are not participating in the market rally, and, it's the kind of the crap that's rising to the top, but it's really not. The transports are not crap. The banks are not crap. I think to me that this was just a broadening of the rally. FANG was the only game in town in a low interest rate, low growth environment. But now you're talking about maybe actually having a business cycle again where stocks like Caterpillar are rising, Deere, the banks, like I said, other financials. So I think that this sort of lost its most favored nation status of the market being but when the market rallies in a very narrow band of stocks, just like a handful of stocks, that's what happened in 2007. The ags and some of the cats and the commodity stocks were the narrow band. Everything else was falling apart except the narrow band of stocks. And in this case, everything else had been kind of falling apart in the market except for the tech stocks. So I don't necessarily see the rotation out of, a handful of names into a broadening. Now you have breadth in the market as being so bearish. It's bearish, of course, if you own these stocks, like the Amazons and stuff that have come down a lot. But overall, that I see that this is actually being a little bit more healthy. So as long as this isn't like in tank mode, and we're just in chop mode, range mode, it's okay. Expected move $1.55 this week, plus or minus. Apple. All right, so we got our pullback here to the 200. I talked about a right or right out trade to the 112.39. The high here was 112.42, and it pulled back. I don't want to say that this is a secure low bottom, but I like that it held to 20, and I like that we're above that high, and we're not quite to the 50. I do think that 113s could be in the cards, and maybe even a backside test somewhere. Now we're kind of past here, so maybe it does fill the gap to the old all-time high, and everyone will think everything's all okay again, but it'll really just be a backside test, and we'll have come up from the bottom. So I'm cautiously optimistic with Apple. How about we play against Friday's range? Below 110.95, right or right out short. Above 111.87, at least a move to the 50. So I'm sort of okay with Apple. I know that there's a big debate going on. Look where the 10-day was the breakdown point here. We're above the 10-day, so as long as we're above the 10-day, I'm not going to get too bearish in Apple. If we start breaking the 10-day and the 100, which, look, we spent a little bit of time below, but the market clearly wasn't comfortable. It only spent two closes below there and then powered up. As long as we're really above this 110.23, this big kind of game changer bar, it's hard for me to get really too bearish here in Apple. I mean, you broke the trend. Let me draw this in here. Righty. You broke the trend, and you've consolidated a couple days, and now kind of just grinding higher. Yeah, that's my thinking with Apple. So if you want to use this kind of few-day consolidation range, above it, to me, would be still a long. Apple likes to fill gaps. So at some point, this gap will be filled. I don't know that we don't dump again, but it seems to me like we held where we needed to, basically the 50% fib and the 200. This was the resistance. It should now be the support. It was. So yeah, as long as we're above this area here, I'm kind of okay with Apple. Amazon. So this is talk about being the deja vu, history repeating. You had this big move down, the rally just shy of the 50, and then the resumption lower. So you had the move actually above the channel. Now we'll move below the channel, the big kind of pullback. I was hoping against hope for a retest somewhere between this 675.89 and 696.44. It got just shy of there at 710. Rallied back up just shy of the 50, and now it's got to prove itself time. The 50 MA was a lot of support. It was now should be resistance. Anything below the 50, I think you could try as a right or right out short for a resumption lower to either this channel or this channel. If it gets above the 50, this pattern is now different than here. And you can assume that this will come back up and retest the old all-time highs. These are double tops. They are not significant. There's no excess. So I think that they might, if this came up straight up, would be a little bit of resistance. You'd want to see either if it pulls back very sharply or just kind of chops. If it does the chop, this will continue higher. Yeah. So that's my take on it. Below the 50, you can still now be looking to reshort, but if it gets any moves above the 50, particularly on a closing basis, I don't want to really F with it. Facebook. So there's a lot of angst in Facebook, and there's a lot of people who are upset. Listen, I said to book profits in the 128s and the 130s. It got 133s, but, we got the price achievements. People got really greedy. So we got oversold. It's trying to bounce. I've been a little bit more cautious on Facebook. I had said that below the 200, you could try right or right out short, small. Once you got through it here, should have been a stop out. A lot of people were complaining about that, but I had said not to get overly bearish in Facebook until we had a definitive close and a break of the 50-week MA. It held here, it held here, it held here. if we were to lose this low, let's use this weekly bar. This is the weekly hammer. Anything above 119.13 is kind of okay. Below 113.55 would be very bearish to me. Let's talk shorter term. So you have these defined peaks. We spent some time below here. It was starting to accept, but now isn't that comfortable. And now we have a consolidation range. So I'm okay with this thing as long as these 119s, basically the 200-day moving average now holds. We broke it, spent some time above it. It should really now hold. If it doesn't, if you lose this bar, and we got about halfway there, these lows, maybe this is trying to set up for a mini inverse head and shoulders here. Left shoulder, the head, the right shoulder. So you really need to hold these lows here, this 119 quarter-ish. So let's just say 119s. Anything below 119, I'm going to start getting a lot more bearish on. If this does continue higher and this holds, if we get back up above these highs, I think we could see the 125s, 126s, and maybe even fill the gap to the 127s. Why? Well, and that doesn't necessarily mean we're bullish again, by the way. We're still below the trend. You can see we gap below, we stalled out here. This, to me, could just be a gap fill and a retest of the backside of the old uptrend. So Facebook, unfortunately, has a lot of demons to work through. But yeah, I mean, listen, the best thing that could honestly happen to this stock is that it does pull back a bit and it gets out all these sort of Johnny-come-lately chasers. So yeah, that's what I'm looking for with Facebook. These highs need to be taken for a move, for a retest and a gap fill. Below these consolidation lows, below 119, I really don't want to be too long in this thing, honestly. Google. This was a classic. You know, Google had reported okay earnings, and they actually looked like they wanted to go higher. It pulled back quite violently. It didn't get the full 1.6, I'm sorry, the 61.8 fib that I wanted, but it's now kind of trying to break the downtrend. Let's zoom in a little here. So you're just above it. So let's keep it simple. Above the 10-day, I think you can try long if you want. Below it is, to me, a short. I wouldn't really get too bullish on this, though, considering we're below the 100 MA, and you have a 50 right up here. So I think the upside potential might be a little bit limited. But look at this big candle. This was the range deciding trade. It's a long wick, but the close here was 780.29. So yeah. So anything above there, it can attempt to repair. Below the close into the wick is, to me, more troubling. This close was 780.23, so you're slightly below there now. The 10-day is the must-hold, I believe, if you're playing long. And the only way I'd be interested in adding this stock is a close above the 100-day moving average. Netflix. This was actually one of the best acting fangs. Came up from the bottom, poor highs, liquidation break. I was kind of hoping this would get a fib to set up for a buy, but it hasn't. So we'll just wait, in my view, for the trend to break. If you're still long this, that's okay. 116.50 was the low here. It was some resistance here. I love that we're frozen. Very annoying. But as long as you're above there and the 10-day, I'm okay with if you want to try right or right out long. Below there, this could be lower lows and lower highs. And I'm waiting. For me, I would wait either until one of the fibs, the channel low, and a fib, which would be a great setup, or a break of the channel here and then playing for a move back to the upside. So that's Netflix. Gap stores, I had been bullish, then bearish, then bullish, and then bearish. I've kind of run the gamut on this. It sold out somewhere up around here. It pulled back at the gap fill. I got long again, and then it kind of was bullish, and I got out again near the gap fill. It pulled back a bit, but then got the channel high. So we have multiple days now of consolidation here, basically on the 50 MA. This is a bit of a bear flag. I'd honestly love to see this come down and kind of do the time warp again for you Rocky Horror fans. I'd love to buy it either on the channel low or somewhere near the channel in the gap fill. This kind of setup again. But we're basically riding the 50. It got the 61.8. It bounced. This pullback is probably a little more than you'd want to see if you were still long. I'm not, by the way, and I didn't buy the 61.8, which I sort of regretted. But I'm not as regretting it as much here. I would love to see this get, like I said, the channel low and set it up. I don't mind selling some out of the money puts if you want to start like legging into it here. They have a decent business, and they have a decent dividend. PayPal will end on that bad boy. This is, again, one of these gap and kind of crap. It's disappointing, but I like this stock longer term. I think that this has a destiny with 46s or even the channel high at some point. It's working off a lot of the excess. I'm long via short puts. It's holding the 10-day here, so if you want, use the 10-day. The 200 MA has been some kind of support. Time below it has not been very long, so I like the idea of selling puts that are below the 200 MA and near the channel low, around the 37s or below if you can get them off. A move above the 50 MA to me would be starting to repair the pattern again. Anyway, that's PayPal. So I've been talking your guys' ears off for almost an hour now. We'll end it there. That's my story. I'm sticking to it. Let's have a great week. I'll be looking to do Periscope probably, I don't know, Wednesday or Thursday this week. If you're not following me on Twitter, my handle is @JustinPulitzer. Definitely follow me on there. That's where the action happens. If you like this video, hit the thumbs up. Please leave some comments. Your comments help me make the video. Help me help you make the comments. Help the videos get better and better. So I'll leave it there, and cheers.